the S&P 500 has dropped by a whopping 10% in these last few weeks. Now, we've always talked about the S&P 500 as the most reliable index that you can invest in. But given these recent developments, is it time for us to panic? Is it time to tap out? I sure don't want to lose more money. So in today's video, this is what we'll look to cover. I'll be sharing with you my personal approach to investing in these times of uncertainty. So if, like me, you are feeling a little nervous, not sure what to do, join me today as we look to sort this out. Let's go! But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. And yes, my favorite has been investing in the S&P 500. Not only have I done a lot of videos sharing with you guys how you can invest in the global markets in the S&P 500 from the Philippines, but I've actually invested a good portion of my money, over 500,000 pesos already, in the S&P 500 in the last 8 years. In 2017, I got started investing in the S&P 500 via BPI's US Equity Index Feeder Fund. And last year, in 2024, I started utilizing East West Bank's S&P 500 Index Fund with their industry-low trust fees of 0.5% per annum. Now, those are the two different channels that I've utilized to invest in the S&P 500. We'll go back to that later. Now, let's revisit the numbers. The S&P 500 is down by about 10% in these last 4 weeks. So if you had just got started investing in February, you would be down by nearly 10%. Had you invested in the beginning of the year, in January, you would be down by nearly 4%. Now, what's going on here? Well, as always with the markets, there are many factors in play, but the single most contributory factor that's really affecting the market right now would be US President Trump's new tariff policies that are coming into play, specifically on energy and steel. So for any imports that the US would be bringing in, Trump is looking to raise taxes, trade tariffs on these imports, and these two would just be the first of the new trade tariffs that his administration is imposing. With this, the trade partners of the US are also putting on retaliatory trade tariffs that would be affecting global trade. The first of these moves would be Canada saying, no more Teslas in Canada. So with global trade coming to a standstill, this is affecting investor sentiment. A lot of investors are being spooked out, having a negative outlook of the performance of not only the markets, but the companies that are listed in these indices. So it's not just the S&P 500, the NASDAQ 100 is also taking a beating. Now, that's just a brief background. In this video, we're not really trying to dissect what's going on, what's going to happen. There are many videos out there, news sources that would really get into the nitty-gritty of this. This is also not a political piece, so this is just me looking out for you guys on what you can do as a retail small investor amidst these global movements. So the bigger question is, what are we now going to do? Well, first things first, even amidst this big drop of the S&P 500, what I can tell you is first, calm down, don't panic. As mentioned, I'm invested in the S&P 500 in the long run, so fluctuations in a few days, even in a few weeks, shouldn't really matter in the broader long-term perspective. If you look at the performance of the S&P 500, its charts over the last few years or even decades, despite many dips that happen along the way, the S&P 500 has always generally trended up. So if you're only focusing in these last few days or even in these last few weeks, you of course will be disheartened. But if you zoom out and again see the S&P 500 as a whole, you see that the current value of the S&P 500 is trading around 5,500 at the time of the shooting of this video. So while 5,500 might be down by a lot when you compare it in the last month, you will actually see that the S&P 500 was trading in the same level around September to October last year. So this is about 6 to 7 months ago. So if you think about it, your investment is actually not too far behind. I mean, you could say that you've lost 6 to 7 months. While that definitely feels like lost time, lost money for you, if we are to go by the general trend, the performance of the S&P 500 in these last few decades, then we will see that the S&P 500 eventually recovers. So hopefully you are no longer panicking and having a more balanced view of what's going on here. So with the market being down, these are actually opportunities for us to buy in cheap. Like the famous local investor guru, Bo Sanchez says, when the stocks go down, this is like the store going on sale. This is like a seat sale. This is a time for us to be positioning ourselves and seeing more opportunities for us to buy in cheap if we have lost 6 to 7 months with our money not appreciating. We saw how much the S&P 500 appreciated at that time. Unfortunately, it went back down. But we know that the S&P 500 can get back to that level. So personally, I think this is a great chance to buy in, but it wouldn't be too ecstatic just yet. While I'm excited about these opportunities, we don't exactly know the bottom of the market, so let's proceed with some caution. As mentioned before, I believe in regular investing that helps me cost average in the long run. My personal approach has been investing $200 regularly every 6 to 8 weeks. So why $200? Well, that's the minimum investment needed to invest in the S&P 500 index fund from East West Bank. So I am consciously saving, getting to $200. Part of this coming from you guys from my YouTube ad revenue, so thank you. So every 6 to 8 weeks, I am putting $200 in my S&P 500 index fund. So this is the regular investing that I've been talking about. But with these current dips, new opportunities are coming into play. So right now, I am shifting a little bit of my strategy. I am no longer waiting 6 to 8 weeks to save up my $200. What I'm actually doing is investing lower amounts on a weekly basis. So instead of $200 at the end of 8 weeks, I'm actually investing around $15 to $25 per week. So what I've done is just basically setting a day when I'm going to be investing in the S&P 500. So because I don't want to miss out on the movement of the S&P 500, perhaps it's going lower or even going to recover soon, I am investing little bits here and there. So to be able to invest in lower tranches, in lower amounts, I'm actually utilizing BPI once again. So with BPI, you can actually invest as little as $1 each time. So if you really wanted to take advantage of these dips and trying to avoid the guesswork and just go into regular investing, you can invest as little as $1 daily via the BPI US Equity Index Feeder Fund. I know I mentioned that I was frustrated with BPI's 1.5% trust fee per annum, but in this scenario wherein the opportunities are just too good to pass up, I am just willing to take the good with the bad with BPI's higher trust fees. So for now, I am utilizing BPI's US Equity Index Feeder Fund again. I can't wait 6 to 8 weeks to be able to save this amount of money, invest it by East West Bank. So I'm parking my East West Bank funds for just a little bit. Of course, I will continue to resume that at some point. But right now, when we are facing a bit of uncertainty, I am seeing that smaller investing will go a long way. So to wrap up, I will continue investing in the S&P 500. I am just changing the regularity. Before, I was waiting 6 to 8 weeks until I was able to save for the minimum of East West Bank at $200. But now, I'm going to be investing between $15 to $25 weekly, utilizing the best features of BPI. So if the S&P 500 and global markets continue to drop, as I've shared with you earlier, just breathe for a minute and zoom out. See again the bigger chart of how they are performing. You are not invested in it for just this small amount of time, but you are actually invested in the long term, and that's where you are able to really make your money, especially with regular investing. So what do you think about this? Do you think that this is a pivotal point for the US and its markets? Are you tweaking your investment strategy as well? Will you continue to invest, or are you going to be sitting on the sidelines and hoping to see when the market bottoms out and invest then? Let me know your strategy in the comment section. If you've liked this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.